Hello and welcome to Ticker Tapes. Today we're taking a look at the world of ETFs. Now, over the last week, we've seen one of the most volatile periods in equity markets in the last decade as markets try to reconcile themselves to an economy experiencing rising interest rates, rising prices, and supply-side shortages. Tech and growth stocks bore the brunt of the sell-off, with the NASDAQ 100 index falling by almost 7% over the last week, a move that took its year-to-date losses to 13.3%. It will come as no surprise to learn that the Invesco QQQ Trust, the ETF that tracks the NASDAQ 100 index, had the third largest outflows of all ETFs over the last week, as more than $1.80 billion left the fund. As we can see in this table from ETF and FactSet, the only funds to experience bigger outflows were SPY, the S&P 500 tracker, and its close cousin, the iShares Core S&P 500 ITF. Every cloud has a silver lining, or should that be gold in this instance, as GLD, the Spider Gold Trust, saw $1.90 billion of inflows last week as risk-averse investors looked for a safe haven for their money. It's interesting to note that there is little to choose between the flows out of QQQ and those into GLD. That's probably no more coincidence, but serves as a metaphor for sentiment in the market right now. One bullish bet that stands out from last week's fund flows data was the $707 million that found its way into the SOXL, the Direction Daily Semiconductor Bull 3X ETF, which is a 300% geared play on the upside performance of the chip manufacturing sector. That was a bold play in a market that was very anti-technology, and the inflows represented almost 17% of the total assets under management in the fund. That trade may yet come good, but given that the Philadelphia Semiconductor Index, or SOX, fell by 10% last week, it would have been a very painful and potentially expensive process as the XOXL magnifies the moves into the SOX index threefold. Geared or leveraged ETFs are effectively a form of derivative that are designed for short-term speculation and not long-term buy and hold strategies. In terms of the best performing ETFs over the last week, we need to look at funds that track equity volatility. VIXY, the VIX short-term futures ETF, rose by 20.26% over the last week. The VIX index is effectively a measure of investor sentiment or greed and fear when markets are volatile. Fear is in the ascendancy and the VIX index rises in value. Precious metals were also among the top performers. PAL, the physical palladium ETF, added 16.20% last week. Brazilian small-cap stocks also featured as the iShares Brazil Small-Cap ETF added 9%, and the rival VanEck Brazil Small-Cap ETF added just over 8% last week. The Brazilian Bovespa Index is one of the few markets to be up over the year to date, with gains of more than 5% so far. The Brazil iShares MSCI ETF has gained 8.27% year to date and has had a positive performance in 3 out of the last 5 trading sessions. And that's the beauty of ETFs, because even when things are looking pretty glum domestically, traders and investors can find uncorrelated or overseas markets to trade right here at home. In fact, you could say that there are ETFs for every occasion and strategy.